Joining us now is Bank of New York Mellon CEO Robin Vince to discuss the business, your outlook under the new administration, which has been a hot topic here at Davos. I thought on your earnings call, you sounded even more bullish than some of the other bank CEOs when it comes to how you view the economy right now.
Well, look, it's good to be with you in Davos. It's always an interesting place. You have people from all around the world. We have a lot of clients, policymakers, everybody coming together. So you get a sort of sense of what's going on. But the reason why we were optimistic in our outlook overall is because capital markets are a critical part of enabling growth. And growth is kind of the word of the day in Davos right now, which is every country in the world needs it. I was in Japan a couple of months ago. Here in Europe, they obviously have some growth challenges. President Trump said that it's a top priority for the U.S. And so with growth of the word of the day, capital markets, we're in the capital markets platforms business. So what's good for the world is good for capital markets, and we want to help our clients navigate through all of that.
The U.S. drawing global capital, that's been the theme, right? The U.S. exceptionalism. You oversee, what, $2 trillion in assets. Do you expect that to continue?
Well, $2 trillion in assets that we actually manage, $52 trillion in assets that we actually custody as well. We have all of these different platforms, but it's those platforms that give us the touch points to see what's going on. So what's happening? President Trump is clearly trying to attract investment into the U.S. He wants to drive the U.S. economy forward. But now we've got a competition for growth around the world because Europe needs growth. Japan needs growth. The Middle East is fueling growth. And so we've got this big need for financing, for investment that's really ultimately going to be about that chapter.
But isn't the U.S. outlook better at this point?
Well, you know, the U.S. has a great set of opportunities. It's got a good hand. It's got to play the hand well. You know, we've worked with a lot of different incoming administrations. Our first as a company was George Washington's administration. We're actually older than the nation. But there is this competition right now for opportunity. And so Davos represents a place where people come together and they're competing for that scarce capital and the opportunity to deploy it.
What about bank regulation or deregulation under President Trump? There's been a lot of optimism about it. Do you think too much compared to actually what could materialize?
Well, I'm optimistic, most of all, about if we can declare victory on all the great work that's been done, raise capital levels, raising liquidity. Now we need stability. We need a level playing field, and we need some predictability. That, I think, is actually what bank CEOs are most excited about. We're not on a big deregulatory tirade. We just want to make sure that we understand the rules of the road and we can help clients really navigate all of that and be in this sort of pro-growth unlocking mode as opposed to rule on top of rule on top of rule. Or if you're in the EU, maybe bureaucracy and red tape piled on top of sort of difficult to do business. And I think that's what European policymakers are focused on here. And in the US, the same thing. How do we unlock? But how do we do it in a sensible way? Nobody wants to be in a boom-bust cycle. We just want to be on the next leg of a growth cycle.
I mentioned your stock outperformance. I think best performing bank stock, along with Goldman Sachs in the last year. And you have a very different business model than Goldman Sachs. So what's been working for you?
Well, we've been focused on clients and helping clients grow and growing with clients. I'll give you a good example. As a firm, we have a lot of different businesses. Most clients knew one or two of those businesses. They didn't know 3 or 4 or 10 of our businesses. And we have these market-leading platforms. And so one fun stat, clients who do 3 or more things with us, they grew 30% last year. And in fact, clients who do more things with us, who know us better, they actually appreciate and enjoy BNY more, and we have a better relationship with them. So we've been bringing our businesses together, really aligning them, serving clients better, and you're seeing it show up in the numbers. And honestly, we just feel like we're getting started on the journey, and we're very excited about it.
Room to run here?
I don't comment on the stock price, but certainly in terms of the opportunity set for us, we think we've got more to do.